GM. So Bitcoin just confirmed its death cross. That's where the blue line, the 50 SMA, crosses below the orange line, the 200 SMA. Do we go to zero from here? Do we bounce from here? That will all be covered in today's video. So let's get into it. Bitcoin death cross confirmed over here. Well, let's take a look at previous death crosses with these orange vertical lines here. So death cross, mark the bottom. We had, of course, all of that tariff FUD, and Bitcoin actually began reaccumulating in this box over here. So you actually had that bearish cross while price was actually in a bullish reaccumulation. So that example, the death cross actually marked the bottom and Bitcoin went higher. So can we compare that to this example? Not really, because we're in a volatile downtrend. We're not going sideways. We're not reaccumulating. So it's not similar at all. But that goes to show how death cross doesn't mean zero, can mean bottom is potentially forming, like this example here. And then you got the bullish cross, which actually led to the top for a few months before Bitcoin then broke out. So it's always price action dependent, because this bullish cross led to the top, but Bitcoin then reaccumulated and then broke out. So again, price is always king and should always be used first before any context like a death cross or bullish cross, golden cross, whatever you guys want to call it. We had a death cross over here, so bottom was already in before it. We then retested the lows, and what is this again? Well, this is just a clear reaccumulation. Price and started going sideways. So gave the signs that it was bottoming out through price. Death cross only gave more context to it, in which another bottom was formed around it. And then you got the bullish cross, golden cross, where we was already coming off the back of high highs, high lows, and that denotes an uptrend and a multi-month consolidation, which we broke out of. So Bitcoin then went higher on that golden cross. So that's going to be the key theme, of course, because it's been a bull market, right? So you see these death crosses over here, they actually lead to the bottom. And again, Bitcoin, it was off a base over here. So this was all reaccumulation. It was already going sideways when you had that cross. And that's why when it then crosses bullish and you're coming from high highs and high lows, there's no surprise that price then marks up. And we've got one more example, bullish cross. So this one led to chop, led to a move higher, move lower, before eventually going higher. Not much interest, but overall, what's the point? What's the key theme? Well, death cross has actually led to a bottom every single time this cycle. But the caveat to that is because price was going sideways and reaccumulating either before it or during it. Whereas this time we are going down. So interesting to see. I do think we are going to see some sort of squeeze, and there is room for a bounce at some point. But at the moment, sellers are in control, especially on the daily time frame. You can see daily 12 and 21 EMAs, they're acting as resistance on all of these touches. This is an aggressive downtrend because these are your fast EMA bands, and sellers are showing up on those fast EMA bands to get out. And right now we're pretty overextended below them. So what can we see level wise in terms of trading Bitcoin today and this week? Well, I've got this chart of Bitcoin. It's the high time frame range, and I want to quickly explain this chart because this is where you want to do business. You've got the discount zone. This is for high risk to reward swing longs, so multi-day, multi-week hold. And you've got the premium zone for high risk to reward swing shorts, multi-day, multi-week holds. In between there, at the yearly open at the 0.5, you're at mid-range. This is for scalps and day trades only, both long and short. You don't want to be taking any multi-day, multi-week swings here, either long or short, because you don't have edge here. The people who are smart money, let's call it, of course, that's just a concept. It's not actually a real person. There's no one person called smart money. It's just a way to describe the markets. Smart money, they sold in this premium zone above 113K. So right now, if you think of the psychology of them, they're laughing. They want price to go lower because when you sell all of your bags, you want price to go as low as possible so that you can buy them back as cheap as possible. So max pain for those guys would actually be some sort of bounce eventually. And then anyone shorting here, just shorting or selling at 94, again, they're going to have their conviction tested. So max pain for them is actually going to be a bounce at some point. But then you've also got people buying here at 94 in a downtrend where the only area of previous demand is actually in this area over here of previous reaccumulation. So trend is your friend, price is down, and we can very much continue going lower. So you've just got no edge here. That's what I'm trying to explain. Whether you're bearish or you're looking too short, price can go to 113 and still be bearish, and that can just be another lower high in this overall distribution. Or price can continue lower, and that of course is bearish because that's downturn continuation. So both examples, you can go up or down from here and still be bearish either way, which is why you have no edge in terms of multi-day, multi-week holds. That's why you want to wait for these high risk reward areas in the discount or premium zone for those sort of trades. And of course, these numbers aren't set in stone. Don't get me wrong, you might have high risk reward swing shorts above 105 or around 88 for longs, 89. These levels are to give us a guide to help you conceptualize how you want to be doing business as a trader. And it's certainly not around this yearly open, which everyone's talking about. This is the place for scalps and day trades because I think a lot of people are going to get liquidated. You're going to see a lot of liquidity get built up and wrecked. Stops get hunted around this level because there's so much interest here. People are longing it. When it breaks, people get short. And you swing up, swing below, swing up, swing below before making the eventual move, whether it's up or down. I think that's what you're going to see. So look at lower time frames. I want to check something out for Bitcoin because I think there is some squeeze risk. Whether it's this week or next week, I don't think people just selling at 94, exiting late are just going to never have their conviction tested. Max pain for them is some sort of squeeze eventually, whether it comes from lower or now, I don't know. But let's look at some levels. So first of all, I've taken the volume profile from the high to the low of this move. That gives you a value area low of 102.6K. So that's interesting to me already. Can take that off. Second of all, we've got the yearly VWAP. So this is where Bitcoin has traded its most volume for the year. So volume weighted average price. And if I actually take off some of these other indicators, you can probably see it a little bit clearer. So if we do that, you can see this blue line is the volume weighted average price of Bitcoin this year. And we're now below it. In previous times, you can see this level's been respected. You then drop below it. You can see on lower time frames, there is some resistance respect there, but more support respect because we were in a bull market. No surprise. You can see in 2023, respected that VWAP, generally respected it. In 2022, bear market year, we spent a lot of the time below it, actually in a parabolic downtrend. So it's quite a respected level, even when you look at 2021, test, respected. So right now we're below it. So you would expect it to act as resistance. And that can again be another area that we potentially squeeze to. And the reason it's interesting is because it also coincides with the 50-week EMA and the back test of that. And we've just lost the 50-week EMA. As a lot of you guys will know, you got this chart over here. Lost the 50-week EMA with that weekly close. Never done that before, at least not in the last couple years. So that can now be a target for squeezes as resistance. Did a high time frame deep dive last night. I won't go into high time frame charts now, so I'll pin the weekly outlook video in the comments. Make sure to check that out. That was 40 minutes long, absolutely packed with alpha. But looking at the low time frame, back to that Bitcoin chart, you've got this zone now, which is between that value area low that I showed you to the 50-week EMA. Also got the VWAP, which could be an area which I'm pretty interested in terms of where can we squeeze up to. So that's your orange zone, and that's between 100.5 to 102.5K. And not necessarily saying this come this week. This could come in the coming weeks, maybe even in December. But I do think there is a squeeze on the cards. And for a shallower squeeze, what I then do is flick to something like the 4-hour and show you what I'm seeing here with the EMA band. So 12 and 21 EMAs, Then got the 50, 100 and 200 EMA. So fast trend, slow trend bands. You've got the 12 and 21s acting as resistance right now. So that is your fast trend resistance right now. It's being respected currently. Hasn't made a new low yet though, so key to note. If we do start closing above there, then you look to your slow trend band, something like this purple 50 EMA. And that's coincided with this H4 order block here, which I'm interested in because we've seen a little bit of respect for these order blocks. You've seen this order block respected over here, like this. Price dipped up into this order block before selling off. So could we see something like that again? And that's around the summer low as well, around that 50 EMA, as I said. So this is another area where I'm looking at, okay, could this be a squeeze zone? And I'd be looking for rejections here in one of these zones and then looking for short setups if I see that. And if I see, of course, open interest starting to rise up and long starting to FOMO in at the top after shorts have got squeezed, that's your perfect signal when it comes to the order flow. And I'll get into that in a little bit. And that's between 98 to 100.4K. So looking at that area for a potential squeeze. But as I said, may come in the coming weeks, may not come this week. Sellers are in control right now and they're currently respecting that fast trend. So could go lower first. And looking at some ideas here. So this was the trade of the week. Super annoying. Make sure you guys watch the weekly outlook video. It was an absolute banger. Mention this as trade of the week potential limit order for a long if we get a quick flush down. And that was at 96, 92, 672. Super annoying. We front ran that. So we just came into it, missed it by a couple $100. So that trade's no longer really valid anymore because we've already seen that quick flush down into it. And now what I'm looking at is this. So potentially could see a deeper sweep into that 91.5K region. And that would be, your higher risk to reward zone. There's a bunch of daily liquidity here, which I think can get targeted. You've got all of these stops over here, which are built up between 91.6 to 93.3K, all the way up to the yearly open. All of these levels which can get tagged. And I think anyone longing the yearly open can get wrecked just by price flushing into these levels. And you've got this big daily gap here, which I think can hold at least on the first test. Maybe it gets filled in eventually, but for scalps, for day trades, short mean reversion bounces, I think that's a good area to be looking at. That's what I'm eyeing up. I haven't set an order yet, of course, in the Discord. I'll let you guys know all of the trades I take. But that's an idea that I'm looking at. And again, not necessarily going to play out exactly like this. Not necessarily going to see the quick flush I want. Maybe it goes gradually lower and lower. In that case, I wouldn't take it because price behavior is everything, guys. Or maybe we even rise up into this squeeze zone, as I mentioned. So you've got the summer low around there. You've got some nice levels where Bitcoin comes up into this H4 gap. You've also got this H4 order block. So it's the bottom of that, where if we squeeze up, and as I said, you see, then longs start FOMOing in, that can be an area of interest to take some shorts. But again, price action dependent at the time. Because right now, H1 bands not being respected anymore. Took good shorts of them last week. Caught some nice profits with you guys. But now it's the H4 bands, which are your next trend bands that are being respected. As you can see here, led to a new low. Here, even finding resistance now. But is the yearly open going to hold? You're definitely seeing sellers slow down here. You're not seeing it as violent as before. That's one thing for certain. So that's why my eyes are looking towards, if we get a quick flush down and there's a lot of liquidations, that's when you want to be interested in a long. Not a slow, gradual grind down, because then actually it's more likely to just break straight through the gap. If you're seeing a nice cause and effect, built up redistribution, you really just want price to have a quick dip and then regain. And that's what can trigger a short squeeze. And that's why I mentioned that price behavior is so important and why the setups are very dependent on the data. And of course, same to the opposite side, if we do squeeze up to some of these levels from here and the yearly open does hold. So that's what I'm looking at. And let's look at some of that data to see what is going on. So this is very powerful when you're day trading, when you're scalping, to have some understanding of who's getting wrecked. Are people opening new positions or are they closing positions in the move? That tells you if it's a short squeeze or if it's actually shorts adding on the way up. Bunch of context, which is why the trades are so dependent on this. So what we're seeing right now is off the New York Open, we dipped into the yearly open just before and rallied straight off that open, took out this liquidity, so just hunted some shorts very clearly there before retracing all that move so far. So yearly open is going to be the very key level to see, do we hold that or not? Of course, you have got the weekly open now, which is currently over here. This is your weekly open. So we'll actually get the magnet there. Let's make this accurate. Weekly open is at 94.2k. So currently trying to hold this right now. You can see price has stopped there so far. So let's mark this level out. This is going to be interesting. It's right above the yearly open. So can we see this level hold, or do we need to break the weekly open? And if you break the weekly open, yearly opens next, and then break that, you're looking at a potential breakdown lower into some of those, either flush example or continuation of this gradual downtrend. So that's what I'll be watching. This move on the New York Open was very perp led. So this wants to load. You can see perp CVD just ramped straight up. So this was all longs just absolutely blasting into the market. You didn't really see open interest rise, so it's not necessarily shorts adding. Instead, it's longs pushing them up and just squeezing them out. You're seeing this open interest actually get really choppy and go down after that move. So looks like it was just a short squeeze, but that has failed because it's got no real demand behind it. You look at spot CVD, it's not backing it up. It's not having the same aggression to buy. And spot players, as I said, it's just not in their high risk reward area to buy. You have to put yourself in the position of one of these guys who did sell in this distribution zone. Are you buying back at 94, or are you just going to wait and be patient for some sort of demand zone? Because it's literally been downtrending for a few weeks now since the distribution break. And this distribution was 4 months long. It's unlikely to just resolve right now. And that's more of a time thing. That can mean we chop around, consolidate, and go up like this. That could mean we set a lower high and actually go up first before then going lower. So many different ways this can play out, but the bottom line is this is not an area for high risk to reward, because bouncing, dumping can both be bearish and can be max pain for either way as people flip flop. So it's just not an area where your higher time frame traders are getting involved, and you can see that through the spot CVD. They're not really interested in backing up these moves, and that's why I'm waiting for that quicker liquidation flush for any longs to trigger a proper short squeeze, because at the moment it's getting muted very easily on any squeezes. So those are the levels I'm looking at. That's what I'm looking at for Bitcoin on a squeeze. Start getting above these bands, then you can look at a squeeze into this gap over here in this overall H4 order block. Start going down, and you're looking at longs getting flushed, liquidated, and that can produce a nice reaction. So that's what I'm looking at in terms of BTC. Now, if we look at the wider market, what are we seeing? Well, yeah, Bitcoin's just hovering around that yearly open. It's been the most bearish reaction to October FOMC compared to gold, NASDAQ, dollar. So gold filled in its H4 gap. Now that's retracing, starting to lose these levels. I think 4K, October FOMC levels, super important. That's your bull bear pivot. Below, expect downtrend continuation to attack the lows. If it can hold, then probably going to chop around. But really in between 4K and the all-time high is just chop now for gold, because you've had so much retail enter. You've clearly seen a double top, so smart money have used that to sell. So now it's a question of, can it reaccumulate up here? Is there just so much demand? Or is this just more exit liquidity bounces and we're going to break 4K and see this distribute further down? That's the question. When it comes to NASDAQ, you're also seeing the sell-off from October FOMC. You're seeing these distribution zones play out, H4OB play out. So targets really are the September FOMC level, and you want to see how does price react to that. And you've, of course, got all of these AI stocks starting to look very toppy now. Got Nvidia, of course, the biggest stock in the world, biggest company in the world, pumping up, retracing the entire move. Looks like a chart which is a little bit exhausted. So are we actually going to see some of these stocks actually have some downtrend? And then what happens to crypto? More on that in the weekly outlook, deep dive into that and how you can identify a Bitcoin bottom signal through the relation to the stock market. Dollar really just chop between 100 and the FOMC level. Break 100 and stay above it, which we haven't been able to do. Then you're looking at further risk off move. Break below October FOMC, then you're looking at dollar weakness. And maybe that sets up for some bounces, some risk on rallies. So that's what I'll be looking at when it comes to the market. Not much interest, of course, on your coins like ETH. They're coming into all of these gaps now, starting to fill them in. I think these gaps are on the 4 hour, so, or the daily. Anyway, point is, they're all filling in. You're not seeing ETH have any strength over Bitcoin. It's filling in its wicks, it's downtrending, and you've just got that weakness in the market, and it is what it is. Price is distributing, it's going down, and for prices to go up, it first of all has to stop going down. I know that sounds simple, but so many people get that wrong, don't they? What is this? This is a downtrend, 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 and then price starts going up, consolidating, then goes up, consolidates, then goes up. This is different, right? This is a change of character, and you can use, again, something as simple as the bands to help you visualize that. Bands go green over here. That tells you we're in an uptrend. Whereas the bands are red over here, that tells you we're in a downtrend. Don't long downtrends, you want long uptrends, and not much interest here when it comes to ETH. You're seeing the daily bands act as resistance. It's filling in these gaps, as I said it was likely to do after losing that all-important yearly open level. So that is over here. Lost it. Now you're below it. It's very weak. 2025 candles red on ETH, so weaker than Bitcoin. And that can lead to reflexive selling as people take profits, they're scared, and eventually that can lead to some sort of bounce. A lot of these alts, if they do go low enough, that's when you can see some ripping rally maybe. I'm not sure how high that goes, but shorts aren't going to have a free ride here, and a lot of people are going to start getting cocky in their shorts. And that's when they're at the most squeeze risk. And you look at something like Total Free here, the altcoin market, if they do start filling in this wick, that's when your high time frame buyers, even if it's just for a bounce, will say, yeah, you know what, risk to reward is quite good here. Let's send this coin up. Let's accumulate a little bit over here and mark it up. Very simple, because right here, you're in the middle of the wick. No good risk to reward. It's just going to chop, mean revert, scalpers and day traders market. But once you get to the high risk to reward area, even if it's just for a bounce and then we go to new lows, it's a good area to mark the price up, because that's an area where smart money previously marked the price up. So can't long Total Free, but this gives you a gauge for altcoins when they're filling in these wicks and they fill them towards the bottom. That's an area where sellers are going to stop selling and much more likely to actually have some buying, and that can create the platform for a squeeze. So high risk reward areas, guys, do business in the high risk reward areas for swing holds, your multi-day, multi-week holds. Otherwise, short-term trading, you want to do business around some of these lower time frame levels, quick in and out, holding no longer than 1 day, 2 days max, and that's how you're going to do well in this market. Wait for the big long liquidations so that there is some platform, because sellers are in control if you're looking to long, because you're going counter trend. And if there is a short squeeze, wait for some sort of rejection and signs that longs are FOMOing in at the top, and you're seeing something like perp CVD just go crazy while spot CVD isn't backing it up. That's what creates these tops around these short squeezes. So that's what I'd be looking for, those signs. If I am going to look for any shorts around rejections, is longs getting excited at the top of it while spot doesn't back it up, and that exhausts the move and leads to rejections and those shorts that offer high risk to reward. So we'll update you all in the Discord, any moves, any analysis for the day. So if you enjoyed this video, drop a like, drop a comment. I'll see you in morning markets tomorrow. GM.